Hi guys, hope you're doing good. I just want to explain how a diversion in the market works. Okay, so if you look on the RSI, this point right here is higher than this point, but on the actual chart, this point is lower than this point. So what does that mean? I'm gonna break it out as quick as possible. Okay, so what happened was this afternoon at 14:30, NAS shot up, right? So I went to the 15-minute chart, and this was in the above 85%, right? Okay, so when that happens on the 15-minute time frame, you then immediately go to your 1-minute time frame, right? Okay, so on your 1-minute time frame, you would wait for the market to start diverting, creating a higher top, you understand? And just when it looks like it's gonna move more upwards, that's where you put your sell order in. That's normally the fake out candle, or the candle that wants to scare you, or because the market's it's rigged against you. That's how the algorithm works. But this, what I'm explaining now, it's part of a winning strategy. So there's a lot of mentors that's gonna be pissed about this video, so please share so that all the beginners traders out there in future traders that still wants to trade can get this video. Okay, and you could have also put out your Fibonacci retracement tool, and it would have fell perfectly in line with, it would have broke out the 61 level, entered again the retest, and the ultimate sell by the 61% level. And look what happened. Look what happened after the diversion. You understand? Momentum on the RSI showed you it's gonna go down. So that's why I put my sell in, and that's why I got 91 pips out of the market today. So yeah guys, hope you also sold. Have happy trading. I will try and make more videos like this. Please, in the comments, if you don't understand, ask me questions. I'll break it down next time in the next video. Ask me what you want to know. Anything I can explain. Anything. Okay guys, happy trading now.